Well, it's a big week ahead. BCE inflation, flash PMIs, RBNZ meeting lined up, and Ukraine tensions lingering. For his take on it all, we're joined by Pete McGuire from XMP. Great to have you in this morning. Those SPY futures getting a lead from Wall Street, and it's all about those geopolitical concerns at the moment.
Absolutely, Cara. Good morning, David. You know, it's been a very interesting weekend, and when you're looking at what happened as far as a sell-off, we've got President's Day in the US today, and what impact I think some of those markets are showing. We've got possibility of a 50 basis point rise as far as Kiwi. I'm not sure whether it'll actually hit 50, but we've had, October and November hit up, so you could see a 25, and 30% are saying it's 50. So I think we've got a bit of fun and games over the next few days, and it's going to be quite an interesting week to trade.
Whether it's central banks, whether it's no data release and everything else, there's so much uncertainty out there at the moment. What can we get certainty from is PMIs. We get flash PMIs around the world, with the exclusion of the United States. Today, what are you looking for in those?
David, I just think that they'll be relatively strong as far as, tipping numbers and so on. It seems to be a little bit tough, but I feel as though the overall consensus is strong growth. We look back in the vision mirror, and what we look forward to is, I think, a reasonable first half of the year, calendar year, that is. So the overall consensus strong. Inflation's a concern. You've got the best part of the GDP. I just note, revised. You're going to be looking as far as the states, probably around that 7.1 number. So overall, it's not a bad part of the world to be looking at as far as US. Equity markets have come off a bit, and I think that US dollar is still sitting at about 95 odd, 95 and a half. There's a bit of movement there to the upside also.
And what are we seeing in gold, Pete? Because it seems like it's hit a bit of a psychological level around that 1900 mark.
It seems to always get to that number, Cara, and then it gets sold off. So it's been a big move up over the last, say, 5-6 weeks, and probably a little bit exhausted to the upside. You know that markets can't go up forever, but the overall mood is very much that a lot of traders are looking, and investors are picking up physical silver, physical gold, and adding that to their portfolios. So they're out of the paper markets, but it's the overall mood is that I think you're going to see higher gold prices over the years ahead. The inflation story, what's going on as far as global uncertainty, and the printing of money all go into the storyline that it's been an incredible asset to hold on to. What we've seen in the last decade, and maybe the next decade, could be just as strong.
Pete, what are you going to be trading around when it comes to the wage price index that will be released here on Wednesday locally? Seems like a binary event, because so many people are either expecting we're going to go and see it go and beat expectations that will bring forward rate hikes from the RBA, or it's just going to come in line. No one's really talking about downside risk, which gives me a little bit of concern.
Well, David, don't forget that, it was only a month ago and we were at 18-month low. So I'm just looking at the Aussie now. We're at 71. It's been a great market to trade in that short term. Possibly, with the commodity boom and prices, you could see a little bit further move to the upside. We could be a 72.25, but I think that, again, volatility across the currency sector, having a look at what's going on as far as US dollar, a lot of our trading partners, an overall mood, coming out of post-COVID could be a nice time to be on the Aussie, but I think it'll whipsaw. And it's a market that does that, David, and that's where the attraction is. It's one of the most heavily traded currencies in the world, and traders love that volatility. So it's hard to put a headline number where it's going to. All it is it'll be wild and woolly, and expect some big swings and, choppiness and whipsaw.
And what price action are we seeing in oil at the moment? Any updates from OPEC?
No, not really, Carol. We're sitting at 93.5 for Brent, 91 for WTI. The overall mood is still super backwardation, talk of tank bottoms. You're looking at supply underinvestment, leaves the market vulnerable. We're looking at what's going on as far as the draw with distillates and the consumption in the US. So the overall mood, and then you're looking at the nuclear situation in Iran, talking still through the geopolitics and the risk premium built into, naturally a number of dollars put into the crude price with Ukraine and the Russia situation. So it's back above that 93.5. It was volatile there, and possibly we're on again another upswing. So I'm not to say that it won't hit 100. No one can be a fortune teller in these markets, but the overall mood is that it looks like it's heading higher, and it's not a bad market to be a hold of.
Linked to energy prices, the CAD, the Canadian dollar, of course, very closely correlated at times. How do you see that at the moment,
Yeah.
given what we're seeing with the strength in energy markets?
Yeah, 127 and a bit, Dave. I think that there's probably further, again, maybe a little bit further move as far as that Canadian dollar, another currency that is incredibly volatile to trade, and that's one of the great attractions. So, yes, I would say with higher energy prices, that plays well for the Canadian oil sands market, plays well for the domestic economy there. Trudeau's where he's running the country at the moment. Many people are saying that you're going to see further growth across the economic base. So yeah, it's a reasonably not a bad market to trade in, and you could see a little bit further move to the upside for the Canadian in the short term.